Dan Celia.
Our poverty level has done nothing but go up.
I really, really appreciate your show and everything that you're doing. May God bless you.
Your personal economy.
You can't say, I don't want any risk. I don't want to take any risk. I just want to put my money in a CD and forget about it. But I want to earn 18% a year. It doesn't work that way.
Conservative talk radio you can count on.
Once again, Steve Forbes. Hey, Steve, how are you?
Dan, good to be with you.
Financial Issues with Dan Celia.
Hi, Dan. I just want you to know how much I really appreciate the passion that you have.
Aligning reality with truth.
And I've got Congresswoman Bachmann with us right now.
So I just want to thank you. I want to thank your listeners.
We need to save America and keep it intact for our children and grandchildren.
Now, here's your host, Dan Celia.
Welcome back, Financial Issues. I'm Dan Celia, 866-300-9298, 866-300-9298. All the indices still in negative territory. They turned positive for a second or two. They're all in negative territory right now, but just slightly. So that's where we are right now. I mean, listen, there's so much geopolitical tensions out there. You know, it's all gotten so much of the geopolitical tensions that we should be very much focused on, very much concerned about, has all gone, by way of Ferguson, as far as the news goes. So Israeli conflicts, Egyptian issues, we've got Iraq, we've got Syria, we've got potentially Jordan. I mean, we've got all kinds of geopolitical things going on right now. The Ukraine, I don't want to forget the Ukraine. We've got all this going on. And all of this could certainly impact and will impact and has already impacted the European economy and will likely get here at some point in time. But we have this way of ignoring and brushing off. Since it's out of the media, it's out of our minds. If it's out of our minds, we continue to be out of our mind and not even care about it anymore. So that seems to be the way it's been going for the last 6 years. And I don't expect it to change much. But nonetheless, you and I, need to be concerned about some of these other things that are going on. I am interested. I'm looking very much, I'm looking forward to spending some time with some CEOs and corporate people over in Tel Aviv, in Israel, in February. I'll be in Israel. And we're going to do that. I may stop in on some other folks also, as well as bond agency and the Minister of Finance. I'm trying to work that out. But nonetheless, I'm going to go over there and spend some time, come back with a different, at least get a real economic picture of what's going on over there. And I'm looking more forward to that as the days go on. Since my Ukraine trip got canceled, as you can imagine. Now I suspect they may be second-guessing that cancellation. So maybe we being this leadership conference that I was going over to speak with, may reconsider. But we'll see. All the indices, again, in negative territory. I was going to take a quick look at commodities, see if there's any change. No change. Oil is up $1.27. It's at $95.75, headed towards 96. Corn, that's not corn. I'm sorry. Corn is still negative. Wheat is positive. Live cattle down. Cotton up. Natural gas still the same, still down, 386. Let me go to Greg. Greg's calling us from Mississippi. Hey, Greg.
Yes, sir. How you doing today?
Good.
Good. Hey, I was just driving and listening to your program. I'm going to come into about between $700,000 and $1 million, as a settlement from a lawsuit that involved a plane crash. And I was just wondering what to do with it. I mean, what would be, the way things are, I'd be afraid just to put it all in one place, Yeah. I thought you could offer me some good advice.
Well, Greg, I definitely would not want to see you put it all in one place or all in one specific type or kind of investment. So I wouldn't want you to do that. The one thing that I would offer you in the very beginning, as soon as you get this money, if it's in the near future, I would probably take a piece of it and look for land, possibly some agricultural land that is currently being worked that you can continue. And I think that would be a real solid investment for the future. So that may be one thing that you can look at, because sounds like you may have an opportunity, to buy that cash, not have any debt, so you can create a little bit of a positive cash flow from it. And if you're going to stay with that land in Mississippi, Alabama kind of area, there's still some very, very good prices in that. And I think that would be one thing to consider right away. While you're working on that, I probably would tell you to be extremely cautious. I would develop a stock strategy for another piece of that money. That strategy would include things relatively conservative. I would have some preferred stocks. I'd have some large cap stocks, large company stocks that are producing dividends. I would definitely have some energy stocks. That would include maybe some oil, maybe some gas, not maybe, oil, gas, and some refinery kind of stocks. All three of them, because even though they're in the same sector, the energy sector allows for you to maintain energy, but to have some pretty good diversification, because those three stocks act different under certain economic conditions. So you kind of have some diversification. So do that as well. And all total with that, maybe that's total, 40 to 50% of what you have. The rest of it, I wouldn't do anything with. I certainly wouldn't, I wouldn't do it into any kind of products whatsoever. I would rather it sit in a couple different money market accounts. Certainly, if you don't have a Roth IRA account and you have the ability to put it in a Roth IRA account, I would do that. I would max out a Roth IRA account for yourself this year. I'd max it out again in January, get as much money as you can in that. If you're self-employed, then I'd open up a SEP account and I'd max that out this year and next year. So you can do some things like that. The beauty of this money is you're getting it tax-free. You're not going to have to pay any taxes on it because it's a settlement. So, it's all going to go to work. I would also carve out a piece and possibly look at a charitable trust, more so than a charitable gift annuity, but a charitable trust, so that you can get some tax benefits and create some permanent income for the rest of your life. So if all else fails, you've bought yourself a pension plan with this money. So, there are just a couple of general things, but the first order of business for me would be obviously to set up some accounts, but leave them in money market and probably start looking at some potential land opportunities.
You're saying land that's already being worked. Actually, it would be more in the panhandle of Florida where I'd be, probably or Alabama. That would be all right too.
Okay.
Where do you find that at? When you buy land that's already being worked, does that mean you buy it as a corporation or company? No. You could buy it. You can buy it as an individual, but you're just becoming a landowner of agricultural land. And now, there's a farmer that's farming it that is paying you a percentage of his harvest for whatever it is he's growing. And it can be, you're not going to make thousands of dollars and a lot of money from it. But the idea with the agricultural land is, I think that more so than any other real estate, is you're going to be able to get some appreciation. Because I think agricultural land is going to continue to be in somewhat of a demand. So you're going to need to hook up in the areas in which you're talking about with a commercial or a farm land broker and to find out what's on the market. Because a lot of times you're not going to drive around and see for sale signs on some of these. And you've got to do that. So I would contact,
in a particular area. So say you're in the Panhandle of Florida. Maybe you go to Tallahassee or one of those areas, Pensacola, and call the Farm Bureau in that area and ask them who a good broker might be, and they'll be more than happy to work with you and tell you who that is, give you a couple names. And I would probably start there to try to find that kind of property.
I appreciate this so much. I like the land. I like all the ideas. This number that I called, is it the same number I would call if I wanted to get in touch with you? Or
yeah, I mean, yeah, I think no. The better number to call, and they can get you in touch with me, Greg. If because if things get complex, and you might need some help, would be if you call the foundation. It's 800-326-4543, extension 345, and you'll hear that number again probably during the break. They would be the organization that you'd work with on a charitable trust idea, but also they will as it's going to seem to be a little complex, they'll get you in touch with me. And you can go online at the AFA Foundation, afafoundation.net, afafoundation.net, and you can contact them that way. But that would be a good place to start there.
Well, I want to tell you I appreciate it, and I do love the Lord with all my heart. I live in the Lord's economy now. He's blessed. He's already blessed me, and this is just kind of a surprise, but thank you so much. I'll be in touch with you.
All right, Greg, thank you. I look forward to talking to you. And yes, you're absolutely right. Boy, the Lord sure has blessed you in a powerful way, and I know you'll, want to give back to Him. And one of the things that I tell people all the time is that if you have the means, and certainly you want to tithe on what the Lord's given you, if you have the means to do it right now, a great way to do it is through a charitable trust, your own charitable trust. And you make that tithe to your own charitable trust. You get the tax benefits of it. You get permanent income for the rest of your life. And you're doing the Lord's work. I mean, it's a wonderful thing. It's a great way to do that. So I'm sure you'll think of that as well, Craig. And you can find out about that at that number. And again, during the break, you'll hear that phone number again. But it's afafoundation.org or .net. I'm sorry. afafoundation.net. You can contact me through Financial Issues. This name of this program, financialissues.org. Let me go to George. George calling us from New Mexico. Hey, George.
Hey, how you doing, Dan?
Good.
Hey, thank you for your common sense. Really appreciate it.
Oh, you're welcome, George. Thank you for saying that.
Listen, I heard on the news the other day about the mortgage holders on homes that the late payers, like a month or two late pay mortgage holders, was down. Is that in relation to the fact that so many people have lost their homes, have been repossessed, or what?
That's exactly what it is, George. So think about we had 4 solid years from 2008, 4 solid years of foreclosures and people basically putting the keys to their home in the mail and sending them back to the bank or whatever. So what happens is, and I'm not saying this is a good thing. I mean, it's sad. A lot of people lost their homes. But it also cleared out a lot of those subprime mortgages, those subprime lenders, due to the high unemployment rate and such. So all of that has worked its way, as they would say in Washington or on the news. It's worked its way through the system. In other words, most of them are gone. So now you're left with the people that have jobs that are able to continue to pay their mortgages. I mean, that's putting it simply, but that's what's happened. So when that happens, you start to see, this change of late payments, because these are people that probably were never late to begin with because they were able to maintain their employment. And maybe, houses are older, not underwater. So that's the main reason, George. You hit the nail on the head. Thank you for that. 866-300-9298.
Hi, this is Dan Celia. We talk all the time about investment strategies and planning on a regular basis, take an awful lot of phone calls. But I do know that some of you may have some pretty complex situations. When it comes to your wills, a power of attorney, a trust, a living trust, some other complicated estate plans, tax planning, you may need just another opinion on how to deal with that. Well, I hope you'll call the AFA Foundation. The AFA Foundation stands ready to help you in any way that we can. Maybe you'd like to sit down with me or someone else if your situation warrants it, and we'd be happy to do that. Give us a call at 800-326-4543, extension 345. 800-326-4543, extension 345.
The opening statement in the Constitution of the United States says this, that we, the people of the United States, in order to form a more perfect union, establish justice, ensure domestic tranquility, provide for the common defense, promote the general welfare, and secure the blessings of liberty. I don't know what part of that we don't get anymore. That was written by men who cared about this country deeply.
Financial Issues with Dan Celia.
Welcome back. 866-300-9298. The Dow just turned positive. 866-300-9298. You're listening to Financial Issues. I'm Dan Celia. We're going to get back to the phones. 866-300-9298. We got two lines open. Let me go to Andy. Andy's calling us from Indiana. Hi, Andy.
Hi, Dan. Hi, Dan. Thank you so much for taking my call, and bless you, sir, for your ministry.
Thank you.
I do have a couple quick questions.
Okay.
I do have a retirement plan with my company that I fully participate in, but it's separated into two plans. I used to be in management. That's where most of my money is sitting right now, approximately $100,000. Mm-hmm. And now I'm in union, and I got approximately $30,000 sitting in that. Okay. I've been looking at the option of just combining them both into one. Would that be a good move, bad move?
It depends on which one you're going to combine to. So
I think the only option I got is probably combining into the union plan.
Yeah, I would not do that, Andy.
Okay.
Yeah, I would definitely not do that. Normally I like that idea. I like the idea of growing, you're compounding things on a bigger number. Normally I would like that. But based on the fact that it's a union plan, you don't have quite as much control. They have way too much control. I don't like doing that. I would not suggest you do that. I would rather see you take that money, roll it over, if you want to get it out of where it is, roll it over into your own personal IRA somewhere. Open it, and do that.
I'm sorry to interrupt you, sir, but the company, I looked into that, but because I'm still working with the company,
right?
They say I can't do that.
Are you still making contributions to it?
Yes, sir.
Oh, okay. All right. Oh, okay.
The other one I'm not.
Oh, but the one you're not, you should be able to roll over. But if they don't allow you to do that, that's fine. But I would still rather see you keep it than leave it where it is than roll it over.
Okay. And then my second question, sir, is I do have a Roth IRA.
Okay.
But I have not been contributing to that at all. I'm just kind of letting it sit there and grow little by little. A friend of mine is trying to convince me to contribute to that because tax-wise, I come out ahead.
Well, how old are you, Andy?
I'm 52, sir.
Yeah, he's right about that. I mean, in the long run, you're going to be better off contributing, as much to that as you can. And if the current one you're contributing to is not matching anything, then there's no real incentive to continue to do that. And you may have more flexibility by every pay contributing to your other Roth IRA because you may have more options available to you, to be able to do a lot more, a different, many more different kinds of investment strategies available to you. So I agree with him. I mean, I would, he's right that in the long run, from a tax standpoint, it would be better to do that.
I see. Dan, thank you so much for taking my call, and bless you and your family, sir.
Thank you, Andy. I appreciate you saying that. Let me go to Johnny. Johnny calling us from Mississippi. Hey, Johnny.
Hey, you doing good today?
Sure thing.
My question is, I've got an E-Trade account. If I open up an IRA within the E-Trade account, can you buy and sell individual stocks within that account, or without being penalized for selling, as long as you leave it in that account?
Yes. You can do whatever you want in that account. You can buy, sell bonds, mutual funds, individual stocks, anything. You never get any penalties or taxes unless you actually withdraw it from the account.
Okay. Well, like you have, like with the account I got now, I've got where your money goes to when you sell the stock until you purchase more stocks. Will they set up another account for that separate from that one?
Yeah. So you mean a separate, like this IRA account? You mean?
Yes. Will they set up a separate holding account for the money, like you transfer from your personal account into a holding account to buy stocks out of? Will they set up a separate one?
No, it'll be a separate one for that new account, that IRA account you set up. In that IRA account, you will have a separate money market account that it goes to, that the monies your buys and your money that you deposit go to, just like the other account.
Well, that answers my questions, and I sure do appreciate it.
All right, Johnny. Thank you for the call. Good questions. Let me go to Mark. Mark calling us from Virginia. Hey, Mark.
Hey, good morning. How are you, Dan?
Good.
Just a quick question. I'm relatively new at purchasing individual stocks, and I'm a partner with you.
Mm-hmm.
One of the questions I have, at the beginning of the year, I transferred over my yearly allotment to a Roth account, and so it was in the money market account. My question is, would it be best to let it sit until the market comes down in that Roth account, or buy in, say, $500 a month into some funds, dollar cost averaging in?
Are you going to continue to contribute to that?
Yes.
On a regular basis, on a monthly? Yeah. Excuse me. If you're going to continue, Mark, to contribute, on a regular basis, then no, I think it's perfectly fine to start buying in, at small increments right now, and then continuing to contribute to those in small increments. I think it's fine, assuming you've got more than 10 years before you're going to draw upon that money. And I think it's fine to do, even though we know we've got this coming downturn. But I think as long as you're contributing throughout that downturn, and that doesn't change, then I think you'll be fine.
Right now, I have a handful of stocks in the Roth account,
but
all of them right now are up higher than what my cost basis is.
Mm-hmm.
So would you tend to look at which one is up the least amount and contribute to it, and then the next month we'll do the same thing, look at the least?
Yeah, I would look at always the one that has is up the least or is down. If you get in any so let's say you have these 4 stocks and you're doing this, that's a fine thing to do. And then during the pullback, so say tomorrow the market crashes, and 3 out of the 4 stocks, kind of hold their own. Maybe they come down 4, 5, 6%, but all pretty good. And you got one that's just totally tanked and stays down there for a while. Then I would do that one that is tanked bad. I would try to keep putting money into that until that starts recovering.
Okay.
All right. Thanks, Mark. Great question. I sure appreciate the call. 866-300-9298. 866-300-9298. We do have lines open. You're listening to Financial Issues. I'm Dan Celia. We're going to go to Cindy. Cindy's calling us from Ohio. Hi, Cindy.
Hi. I have a question regarding what to do with a $25,000 lump sum that's supposed to come to me from my husband's death benefit through the Army. I don't know whether I should purchase a home or invest the money and rent. I've been medically disabled since 2001, and I had to supplement my disability income with my investment money over the period of time since 2001 to now. So it's tapped.
So I would say, Cindy, that, I mean, the ideal situation, how old are you, Cindy?
56.
Yeah, I mean, the ideal situation for you, if you have other monies, it doesn't sound like you do, to add to buy a home. And you can buy if you can buy a small home or condominium or something like that for a reasonable price, a very reasonable price, so that you can have a extremely reasonable payment every month. I would rather see you do that. And the reason I say that is because I would like you to be knowing that you're working to a place where, you know, hey, in 10 years, 15 years, at least I'm going to own this condominium or whatever it might be. I'm going to own it, and I'm not going to be paying rent, because that is going to be about the time of your life when you're probably going to go through some life changes medically, like we all are. And, you know, you're going to be able to at least afford to pay the rent. So I like the idea of doing that if you can. What I wouldn't want you to do is take the $25,000, put it down on an expensive house. And chances are you're not going to be able to do that because you're probably not going to get a mortgage. But
house payment lower than what rent would be.
What rent would be. Yeah. I mean, so you want to get a house payment lower than what rent would be and what you can qualify for easily to get.
So I'm tracking to get my boots pulled up by my bootstraps or my financials pulled up by my bootstraps, and I'll be there. Nobody lives forever. That's the only thing for sure in this world.
Amen.
Is everybody dies. So,
yep.
You know, I want to get on with living and not worry about the downhill.
Yeah, I'm with you on that, and I agree with you, Cindy. You know, it sounds like you've got you're on the right track. You just got to keep that frame of mind and keep plugging along, and you will get there.
Okay. Well, bless you. Thank you so much.
All right. Thank you, Cindy. Let me go to Bill. Bill calling us from Georgia. Hey, Bill.
Hey, Dan. I got a friend that just went through a divorce, and she got half of his 401k, and she needs to know what to do with it, where to transfer it to, or to maintain it as a retirement. Yeah.
Well, I mean, the first thing she needs to do is open up an account, an IRA account. You know, you can do that. I mean, she can do it at the bank. She can do it with a financial advisor if she has one or knows of one that she can trust, or she can do it, you know, at a brokerage online. You know, she can go online and open the account up at one of those online brokers, Scottrade or E-Trade or TD Ameritrade or Schwab or one of those. Open up an IRA account. And then, that money, when she gets it, she'll just sign that check over for deposit only. As a matter of fact, most of the time, they won't. I don't know about the state of Georgia, but in my state, in Pennsylvania, she wouldn't be able to get that money unless it was going directly from the lawyer's office or to a qualified account, an IRA account. So here they would make you would have to have an IRA account set up that it's going to go into. So she ought to get that set up with the idea of transferring that money right in there. Then, of course, the big question, Bill, is what do you do with it once it gets in that account? So if this is her retirement, in other words, this is all she has to take her into retirement, then and she's, in her 50s, let's say, then she's got to be very cautious about preserving it. You don't want to take too many chances. You want to take a relatively conservative approach in what you're going to do with it. But she should have some exposure, about 50% of it, to the markets. I wouldn't do it in the next 12 months. So the beauty of doing this now is she's not going to have any sense of urgency as if she has to get it invested. So it'll give her some time to kind of think through some things. But she will need to have an IRA account set up so that she can get it rolled over to it.
That's a traditional IRA?
Yes, sir. Yeah, it would be a traditional IRA. I mean, it could be a Roth IRA, but then she'd have to pay tax on that money. And I don't know how much it is. If it's a significant amount of money, then, you wouldn't, you might not want to have that tax bill, obviously. So
yeah.
Does she work, Bill?
Not right this minute, but she will be.
Okay. Yeah. So, I would just get the account open, traditional IRA, again, if it's a significant amount of money, and then it'll just roll over there. There won't be any tax consequence to her or penalty. And then she can take a breather and think about exactly where to invest it.
But if she puts it in the Roth, she wouldn't have to pay a penalty, just taxes, right?
Yes, just taxes. Yes, that's correct.
Okay.
Yeah.
All righty. When you say conservative.
Well, when I say conservative, I'm talking about some big, large company mutual fund. If she did it, let's say she opened that Roth account up at Timothy Plan, I would probably look at, 50% of it, maybe even 60% of it in their conservative growth fund. How old is she, Bill, roughly?
She's 51.
Yeah. So, I would probably have like 50% of it in something like their conservative growth fund, and maybe 10% of it in their defensive strategies fund, which is even more conservative. And then the rest of it I would put in their large company value fund, which is a large company stock, because I think in the next 10 years she'll do fine with that.
You say put 50% in conservative.
Yes.
The other in
defensive strategies.
Okay.
At 10% in 10% in the defensive strategies, and then the 40% in this large cap value fund. If she wanted to do just that in mutual funds, and then forget about it. All right. So I think that'll work out for her well, Bill. Thanks for the call, 866-300-9298. We'll be right back. Hi, this is Dan Celia from Financial Issues. Like every ministry, we need to raise support to continue in the work that the Lord has for us to do. One of the ways that we do that is we ask you to help support the ministry by becoming a partner with us in the ministry. What you get for that partnership is access to our investment strategies. You'll get access to our asset allocation models, my stock picks that come out every Monday, our email alerts that may tell you when to buy or sell, or maybe give you comfort during a volatile time. It is an incredible value for $85 a year, and you get to support the ministry. It sure would be a blessing to us. Would you consider supporting Financial Issues and be a partner? I guarantee it'll be the best investment you ever make. Go to financialissues.org, financialissues.org to support the ministry. I sure would appreciate it.
The opinions and recommendations expressed by Dan are his own and do not necessarily represent the opinions of this station or any of the show's sponsors.
Welcome back, Financial Issues. I'm Dan Celia. It's great to be here. 866-300-9298, 866-300-9298. Let me go to Terry. Terry's calling us from Louisiana. Hey, Terry.
How are you, Dan?
I'm well.
I'm 58 years old.
Okay.
And we have a 401k at my place of employment, and I've managed to put approximately $500,000 away. And last December, I moved it to the Fidelity Freedom Fund, 2015.
Okay.
and left my future contributions as they were before to moderate growth funds.
Okay.
Should I have moved all that to the Freedom 2015 for security reasons? Because I'm to the age that I cannot possibly go back and start over or lose a big portion of this money. Because we do have the ability to go to the Freedom Fund 2016, 2017, or whatever. What would you suggest with that?
Well, I'd have it all in the 2015 fund. If that's the most conservative thing they offer, Terry, then I would have it all in that. I wouldn't split it up. Doesn't make a lot of sense to do that, particularly if you have some concern, obviously like we all do, about preserving it. You make a great point. I wish everybody would understand that point, that you don't want to be in a position, you're not in the position because of your age to obviously start over again. But I would say this to you, that even at that, the 2015 fund is the 2015 fund is going to, is not a total, and I'm sure they told you this, but it's not a total preservation of what you have. I mean, it's still exposed to both the bond market and some equity, not a lot of equity market, but stock, but some anyway, but a lot more bond. So you're still gonna have that exposure, and you still have a risk, though. In theory, if the market turned down 20%, this 2015 fund, would only turn down 5%. I mean, that's the theory. I don't know if I totally buy into that, but that's the theory. So I just give you a heads up on that. I mean, I'm saying I would do it all in that if that in fact is the most, stable conservative thing they have. If they had something else, they offered something else. Let's say they offered, even a money market account, then I would certainly have, 50% of what you have in that very, very, conservative, stable, safe thing. If this is not the safest and they have something that they believe is safer, then I would have 50% in that and 50% in the 2015.
Okay. Do you feel like that amount would be a safe amount for a man to retire? He will get Social Security also?
Yeah. I mean, unless you have an exorbitant high lifestyle, or debt or something like that, I think that's more than enough. I think you'll be in great shape. But of course, everything, always is dependent upon sometimes not how much you have always, but what it's in, what kind of investments it's in to carry you into that retirement. So that's very critical, that when you retire, you really develop a well thought out strategy to make sure that you're not being overly aggressive in any of that strategy. And, you're going to be able to weather whatever storm might come along. But at that much money, I would suspect that you'd be able to easily live off, after a new strategy is developed once you retire, off dividends and interest from bonds, stocks, and some preferred stocks and utilities, things like that. So as long as you have a good, well-diversified strategy, I think you should be able to live off that without dipping into the principal. You should be able to make enough and earn enough from that to be able to live fine.
That was the goal, was to preserve the principal.
Yes.
And supplement the Social Security.
Yep. Well, I think you did a fine job accumulating that, and now you just be real conscious, which it sounds like you are, about preserving what you have as you start to wind down your accumulation stage of your work.
And the future funds would be all right to the moderate growth, or to the funds that I developed this through. Just continue to contribute to those.
Yeah. I mean, I think that's fine. you know, to do that in the future. You mean? Is that what you said?
Yeah, I mean, I'm still working. I probably have 4 more years to work.
Yeah. As long as you're still working, I would continue to contribute absolutely to those.
Yeah, but continue to contribute to the funds that I have in the past to make this money up.
Yes.
Okay.
Yeah, I think
the
that.
growth funds and stuff, and take some chances.
Yeah, I think that would be fine. I would just get all the rest of it preserved and continue to contribute to those others.
I appreciate the information, sir.
All right, Terry. Thank you. Great question. Let me go to Marvin. Marvin calling us from Michigan. Hi, Marvin.
Good morning. Thank you for taking my call.
Sure.
I have a good problem. My wife and I have inherited just a little over $40,000.
Okay.
And we want to give most of it to charity.
Uh-huh.
And two things. First of all, I really don't know what charities to start at. I mean, what charities where most of it or a good percentage of it goes to the project instead of being wasted or whatever.
Mm-hmm.
And secondly, it's going to take about 4 or 5 months to do it all, and I don't know where to put it until then. If I put it in a savings account or if I put it in a money market, I don't get hardly anything. But is there anything else? I don't want to tie it up in a CD.
Right. You know, Marvin, there really isn't anything else. I think that you have to remember that in 4 or 5 months, maybe even a year, you're going to start, setting up your strategy as to where you're going to start giving those funds. And it would be silly to take any risk by putting it into the market and have that 40 turn to 35, even though there may be opportunity for you to earn a little bit more. You can't have the opportunity to earn a little bit more without the risk of losing a little bit as well. You can't have it, both ways. So I would suggest to you that you don't do anything with it. You keep it in a money market account until you make that decision as to where you're going to, give it to.
Okay, thank you. But second question, one more question.
Sure.
You said it costs around $85 to get on your yearly list. How do we get on it?
Well, you have to go on the computer on the website at financialissues.org. And, that's one way you can support this ministry and have opportunity to, have partner with me and have the other things available through the website. It doesn't sound like you might need to do that based on what you've just told me. But
well, we have other money too.
Oh, okay. Well, then, yeah. I think that so you have to go on the website and do that at financialissues.org, and you'll see where it says partner with us, and you just click on that, and that'll take you to the place.
Okay, thank you very much.
You're welcome, Marvin. Thank you. Let me go to Oz from Maryland.
Hello?
Yes.
Yes, thanks, Dan, for taking my call.
Sure.
Just two quick questions here, Dan. Wife and I was planning on replacing one of our cars. It's both over 10 years old and well over 100,000 miles on each one. Would it be wise to wait for the correction to be over, or is it okay now to go ahead and purchase one? We probably don't do cash.
Yeah, no, I think now is a good time to do it.
Okay.
Yeah, I wouldn't even hesitate. I would do it now. Auto sales taking a dive right now. Prices dipped up a little bit. But used car sales, used car numbers have come down. So I think this is probably as good a time as any to do it.
Okay, and if correction does take place, which more likely certainly will, and the banks may close for a short time, will people still be able to write checks out to pay for their bills? And if so, should we be keeping a little extra in the checking account?
So that's a good question, Oz. So if the banks, the banks are only going to close for, in my opinion, they would only close if there is some sort of currency crisis. So if the market tanks, or if it doesn't really tank, it goes down 10, 15%, which I wouldn't really consider a crash or tanking, just a correction. If the market corrects, that's not going to hurt the banks. That's not going to impact the banks. And it's not going, more importantly, it's not going to generate enough concern in the American people that there's going to be a run on the banks, which would be another reason why they would close for an extended period of time. So I wouldn't suspect that is going to happen. I think the only way that's going to happen is if the banks have to reset some of the way they calculate the value of the currencies and the value of accounts as a result of a devaluation and so on and so forth. And, at that point, the banks would close for a period of time for two reasons. One is to get all that work done, and the other is to stop the run on the banks. Not that that would stop it, because the day they open, it would start again in all likelihood. But so, under that scenario, yeah, you should still be able to write checks and mail them, although you'd probably be advised not to do that. Because if you did that, you might have to devalue the money that you're writing it for anyway. So certainly if the banks close, there is going to be a grace period for paying those bills. There would have to be. They couldn't expect people to write a check on money that they don't have in there. So in all likelihood, if the banks close, they're not going to process any of that anyway. So I wouldn't be too concerned about having some extra in there for that purpose.
All right. Thank you, and I'll be getting back with you on another day. I turned 65 this past Sunday, and I retired the 1st of August, so I do have some other questions about my 401k and that, but I'll get back to you on another day, Dan.
Okay, I'd love to talk to you. Thank you, Oz. Happy birthday. Let me go to Mitzi real quick in Virginia. Hi, Mitzi.
Hi, Dan. Good morning. I have a couple questions, and I think I'll probably hang up and listen because I'm afraid my phone will die.
Okay.
I'm concerned about, I was wondering about the purpose. I'm not concerned, but I was wondering about the purpose for having Swiss francs.
Okay.
So would you explain that to me?
Okay.
And also, I thought charitable annuities had to be of a pretty big sum of money, but all of a sudden I think I heard you say you could get some for $1,000 or $2,000.
Yeah. They don't have to be. They don't have to be a large sum of money. I mean, I'm speaking now. I'm speaking for the AFA Foundation. There's probably some. I know a whole lot of organizations. There one in particular that I've done some work for that requires $10,000 as a minimum. So they're all different, but yeah, it's not a huge amount of money.
And how about the Swiss francs?
So the Swiss francs, the purpose you would buy Swiss francs and have them in your person, in your home, would be for the reason that I just talked about with Oz, is that if we saw a devaluation of the dollar and a closing of the banks and a depression, so to speak, or a severe recession at the absolute best, and when we saw that happen, and I'm not saying that's going to happen, I'm saying that it's possible if we continue on the current trajectory that we're on right now, that's very possible. If that were to happen, I personally have always said I would rather own some sovereign nation, good, solid currency. Because what's going to happen, and I think this is going to happen anyway in the near future, we're going to start to see across this country more and more merchants taking foreign currency like they do everywhere else in the world. You can go in the jungles of South America and find a merchant there, and they'll take a foreign currency, any currency, and convert it immediately. I mean, everybody does, but us in America. That is already changing. We're seeing more and more of that throughout the country. I think we're going to continue to see that. So the Swiss franc is going to give you some security against the dollar because you'll be able to get more bang for that dollar than you will maybe a U.S. dollar, and might be a little bit of a safety line for you if things really collapse. So it's only a catastrophe kind of protection. I want to thank everybody for being with us. Remember, folks, it's all His. Let's stand before Him someday and be found a good and faithful steward. God bless.
If we ever forget that we're one nation under God, then we will be a nation gone under.